Good morning, it's me, Kenny Polcari, your host of the party. So what's happening? It is Monday, August 16th, and so much has happened since Friday night, so I don't know where to begin, right? So let's just start. Afghanistan fell like a ton of bricks after the Taliban takes over every major city, and then Kabul on Sunday, right? We all watched. President Ghani fled the country, leaving citizens to fend for themselves. Markets are not reacting, though, to this news, but it is reacting to the latest Fed headline. We'll get to that in a second. And the Delta variant continues to disrupt businesses and the supply chain. More negative news out of China. So what are we having for dinner tonight? We're going to try the rigatoni and a sweet sausage tomato cream sauce. It is delicious. Okay, so listen, on Friday, stocks drifted higher. As the media tells us, it was because of better than expected earnings from both Disney and Tyson Foods, right? Adding to the blockbuster round of earnings that we've seen this whole quarter. And as of Friday, 86% of S&P companies that have reported have beaten all the metrics, right? Across all the headlines. And that's well above the average, the usual 75%, right? They've beaten on the top line, bottom line, various revenue lines in between. Forward guidance tells us to expect increasing margins going forward, which means two things. First, there are no sales going on, so you're paying full price for everything, so therefore margins are elevated. And two, companies are raising prices to combat this transitory inflation that we're seeing. And you see in this inflationary environment, margins can only increase if the prices increase or they sell things for full price, which is what they're doing. Or they're taking it at full price. They're raising the prices, and then they're discounting back to full price to make it appear as if you're getting a bargain when you're really not, right? It's not a difficult concept. And we've seen plenty of headlines suggesting just that. Consumer staple stocks are at the top of that list, which is why they're a good buy in an inflationary environment. And while the XLP ETF, which is consumer staples, is only up 7.5% year to date, expect that sector to play catch up with the broader market, which is up about 18%. As stocks drifted higher, both the Dow and the S&P managed to make new highs, rising 15 points and 7 points respectively. The NASDAQ, though, did not make a new high, but it did rise 6 points, while the Russell choked a bit, losing 21 points. The transports, though, rose 27 points. They remained 7% below their May high, and they're struggling right at the convergence of both the short-term and the intermediate trend lines, right? The action this week is going to be telling about what investors think about this ongoing recovery. A failure of the transports to push up and through both these trend lines is going to send a caution flag up, suggesting investors need to be a bit more patient. And patience is okay, right? Economic data on Friday did nothing to drive the conversation at all. The 10-year yield, the 10-year Treasury rose, sending the yield falling, ending the day at 1.268%, while the dollar index fell 51 cents to end the day at 92.52, still above the trend line at 99.12. Gold has recovered a bit after the beating it took on Monday, right? It failed to hold the trend line support at 1807. It traded as low as $1,677 an ounce before recovering a bit to end the week at 1778. All this as the calendar approaches the all-important Jackson Hole Summit, which is expected, where it is expected that Fed Chair Jay Powell will have something to say. And then at 5:45 this morning, Dow Jones Newswire ran with this headline: Fed officials weigh ending asset buy by mid-2022. See how this works? They keep pushing out the headlines to test the investor reaction. Now look, what the Fed needs to do is make investors realize that the tapering does not necessarily mean rate hikes. They are two separate and distinct events. And the Fed has to make it clear if they want to avoid the tantrum right now, right? The pressure is mounting on Jay Powell, who's the Fed chair, to do something, right? Boston's Eric Rosengren, Dallas's Bobby Kaplan are all calling for a move in either September or October, right? Which is going to add to the seasonal volatility and weakness, which the market already experiences. We've talked about that. Some of the others, though, are still pushing for a November-December event. All this while Fed Chair Jay Powell tells us, don't worry about it, it's not time just yet. While we're making progress, we're just not there yet. And so this is the wild card. Will Jay now be able to hold the line, or is he gonna be forced to confront the reality of a tight labor market, rising wages, rising inflationary pressures, and the need to stop supporting an overheating economy that is dislocating prices for so many assets? Will he acknowledge that we do not need to continue supporting a housing market by supporting the mortgage market to the tune of $40 billion a month? No one's saying full stop at all. All we're saying is, isn't it time to just take your foot off the gas just a little bit? And it seems the pressure is building to do just that. Next up, we have to acknowledge what's happening in Afghanistan. Whether or not it's a market mover, and I think it is, but you have to acknowledge it, right? The Taliban took Afghanistan, creating another storm on the horizon, right? Another geopolitical storm on the horizon. A storm that will not in the long term price stocks, but could in the short term create opportunities just because of the unease, right? What happens? What's next? Where's Joe Biden and all this? How come he didn't come out and say anything? Over the weekend, we all watched in horror as Afghanistan fell like a ton of bricks. The Taliban moved in and is now in complete control of the country again. 20 years later, right? Americans and the world waiting for Joey to say something, but instead he remained mum, holed up in Camp David, sending out Secretary of State Tony Blinken instead, who really looked like a deer in the headlights on all the Sunday morning talk shows yesterday, right? As he tried defending the administration's decision to pull all the troops out. Funny, but the mainstream media now is trying to spin the story as if it was Trump's fault and that Joey had no choice. To which I say, really? Come on, stop with the foolishness and stop with the I inherited this. Guess what? Every president inherits everything from a prior administration or prior administrations. And so you go in this with your eyes open. You want to run for president? You go in with your eyes open. You know exactly what you're getting yourself into. So ultimately, the fall of Afghanistan happened on his watch, and that will be written into the history books, unless, of course, it gets canceled, which I guess it could always get canceled, but we'll see. This morning, U.S. futures are a bit weaker as these storms brew, but not as weak as I might have expected. Pictures of the Taliban taking over the presidential palace in Kabul, along with chaotic scenes at the airport as Afghans and foreign nationals attempt to flee the country, will be seared into your memory, the way so many other historical events of the 20th and 21st centuries are, right? So as of this morning, and now as of 9 o'clock, the Dow is down about 160 points. The S&P's off about 20, the NASDAQ's down about 40, and the Russell's down about 15 points as the day gets started. Next up, Nancy Pelosi is still trying to tie the $3.5 trillion spending program to the $1 trillion infrastructure program, putting even more pressure on Joey and the administration and elected officials. The progressive left warning that if they don't get their way, that they're going to disrupt the whole process and create even more internal chaos down in D.C. Economic data today includes Empire Manufacturing, 28.5 is the expectation, mortgage delinquencies and foreclosures, none of which will have a material impact on the action unless, of course, they're so out of line. Later in the week, though, we're going to get retail sales month over month, retail sales ex autos and gas, industrial production, capacity utilization, building permits, housing starts, and the July FOMC minutes and more. Now, the July minutes are very important because they're going to come out exactly 1 week before the Jackson Hole event. So expect many to be trying to read between those lines and predict or speculate about what the Fed chair is going to say, but we already know kind of what he's going to say based on the headline that came out of 545, right? The choices, as we know, appear to be, will the taper really begin in September or will it's going to start in November, December? That's really the question and the pace at which they're going to do it. Asian markets, like I said, started the week in negative territory as the headlines there scream about their stalling recovery. July retail sales, industrial production, and fixed asset investments all missed their estimated forecasts. All while the government warned of an economic recovery that is unstable and uneven. And while the Taliban and the U.S. may have ongoing issues, the media reports that President Xi has already extended an olive branch to the new leadership, setting up the next chapter in that ongoing drama. European markets also began the day weaker as investors there monitor the ongoing political drama, as well as they're reacting to the negative kind of recovery headlines coming out of China and the ongoing Delta variant, right? At 6 a.m. this morning, European markets were all down about 0.75% across the board, and they remain so now at 9 o'clock. Oil is churning at 67.54, down about 90 cents. Investors there doing what? They're digesting all the news over the weekend along with the rising Delta story and how it's going to destroy demand, blah, blah, blah. You know how I feel about that. I think you take advantage, but you have to do what you have to do. Intermediate term trendline support for oil is at $66.92 a barrel, and this will be the level to watch. A failure there could see oil test the $63 level in a fairly short order. if they can convince investors that the global recovery is stalling, which I don't think it is, but sit tight. Bitcoin this morning is up about 2%, trading at 47,600. Ethereum's up 1.4%, trading at 3,300. The S&P ended the day on Friday at 4468, on the high for the day. You can still draw a trend line to support whatever story you want to tell. It's all a guess anyway, since we're up here kind of in virgin territory. You know that many year-end targets are consolidating around 4,700 on the S&P, which would represent another 5% move up from here, bringing the total 2021 return to better than 23%. But those are targets, and so much can happen between now and then, which is why I say I'm looking for that pullback to happen, and then we'll end the year at 4,400. But I'm on the outside there, right? Because I'm looking for that 7 to 10% pullback over the course of the next couple of months. And then that rally into year end, which will bring us right back to where we are now versus 4,700. But hey, listen, what do I know? There is now building support for Jay to announce a plan in August to begin sometime in the fall and end it sometime in mid-2022, which is like July, right? And I have to just say how the story changed. First, it's nothing to see you move on, and then it's, oh my God, we have to begin now and have it completed in 8 months. So get ready for some volatility ahead. Remember, investing is dynamic. It is not static. Stick to your plan. Don't rush. There's no reason to rush. If you're a long-term investor building a long-term portfolio, you are not missing out on anything. Talk to your advisor. Stay focused. Stick to the plan. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it. It's got all my information on it, my email, my phone number, my website, all that stuff. You can send me a message. I'm always happy to engage and talk markets, and talk planning, thoughts, concerns, ideas. You know, you can also follow me on Twitter at Kenny Polcari is my Twitter handle, and on Instagram at KennyP1961. And if you're watching this, obviously, you can catch me on YouTube at Kenny Polcari Media. Anyway, so what are we going to have for dinner tonight? This is really one of my really favorite dishes. It's rigatoni, which is a nice, thick, short pasta. And it's made with a sweet sausage and tomato cream sauce. It's simple to make. It sounds difficult, but it's simple to make, and it is so good, right? So what do you need for this? You need the rigatoni. You can use any other short pasta. Don't use linguine or anything like that. Use a short pasta, right? So you need rigatoni, you need the garlic, you need Vidalia onion, sweet sausage taken out of the casing, white wine, heavy cream, crushed tomatoes, a can of crushed tomatoes, olive oil, and salt and pepper, right? You want to bring a pot of salted water to a rolling boil on the back burner, let it sit there, cover it, let it sit until you're ready to use it. In a large saute pan, you're going to heat up some olive oil, so go 2 or 3 times around the pot. Add the crushed garlic and 1 diced onion. Vidalia, obviously, if you can get it, is the best. Saute it until soft and sweet, maybe 8 to 10 minutes. Now add the sausage meat that you've taken out of the casing. Put it in there and saute till it's all brown. Once it's all brown, you're going to add 2 cups of dry white wine and then let the alcohol burn off. You're going to open the 28-ounce can of plum tomatoes and you're going to rough crush them through the blender. You want to leave it a bit lumpy, right? Put that into the sauce, bring it to a boil, and then immediately turn it down to simmer. Stir. Don't go too far away because you're going to continue to need to stir this. Let it simmer for about 30 minutes. Season with salt and pepper. Let it simmer about 30 minutes. After that, now you're going to add a cup plus a half of heavy cream. You can use light cream if you want, but heavy cream gives it a much richer taste, right? Stir the heavy cream in, stir it up, mix it well, leave it on simmer, and let it just sit there for 5 minutes. Turn the heat off, right? In a separate pot, you want to add your pasta now to the boiling water. And so put the rigatoni in the pot of boiling water, let it cook till al dente, maybe it's 8 minutes. Rigatoni tends to be thicker, so it might be a little bit longer, but take it out before because then you're going to add it to the sauce and let it continue to cook in there, right? You always want to naturally reserve a cup of the pasta water just in case you need it. Strain the pasta, put the pasta right in the tomato sauce, stir it, mix it, add 2 handfuls of the fresh grated Parmigiano cheese, mix that as well, and you can see if the pasta is sucking up the sauce, take a little bit of the pasta water, like I said, add it to that sauce and just mix it just to keep it moist. You don't want it to become soupy, you just want it moist, right? When you're ready to serve it in nice warmed bowls. It's a hearty dish, so you don't have to overdo it, but and there'll always be extra if you want some more. So serve it in nice warm bowls and have your This one you can drink with a red wine. You can certainly drink the white wine you used to cook with. Otherwise, you can drink this with a nice lighter red, not a really heavy one. To this, I would use, I would drink either the Pinot Noir or maybe a Chianti. I mean, listen, you could drink the Brunello di Montalcino if you want, but that's a really heavy red wine. I would eat that with steak or pork or veal. For this, I would use a lighter red, or I'd even use the white. And if you're really into it, it's summertime, you can use a rosé as well. In any event, it is Monday. It's the beginning of the week. The markets are about to open. They look a little bit weaker. Be patient, my friend, because there is opportunity ahead. Until then, take good care, and I'll see you tomorrow.